Listen, the market is heating up, and most people have no idea what's coming. While everyone else is glued to the same old headlines, there's a wave building in areas that could create life-changing opportunities for early investors. I'm not talking about slow, boring gains. I'm talking about sectors that are moving fast, powered by explosive tech, massive government backing, and a flood of smart money getting in before the big run. And here's the kicker. The companies leading these trends, they're still trading at prices anyone can grab right now. Today, I'm breaking down three plays sitting on the edge of huge moves. If you want to catch this next surge before it hits the mainstream, stick around because by the end of this video, you'll know exactly where the action is. As we reach 1,000 subscribers in this growing investor community, we're offering something special, a free guide packed with proven strategies used by top investors to identify explosive stock opportunities. The link is in the description. If this video provides value, be sure to like, share, and subscribe. Thank you. All right, starting with the first pick, Opendoor Technologies ticker symbol OPEN. The stock is making headlines after a staggering rally, with shares trading near $3 and surging more than 300% in the past month, catapulting its market capitalization to roughly $2.3 billion from under $1 billion at the start of the year, driven largely by retail-driven meme stock momentum rather than fundamental improvement. The surge was sparked by activist investor Eric Jackson of EMJ Capital publicly calling the stock a potential 100-bagger, igniting social media hype across Reddit and StockTwits. Fundamentally, the company's business model, buying, renovating, and reselling homes, remains challenged as U.S. existing home sales have plunged nearly 50% from historical highs, mortgage rates remain elevated, and Opendoor has posted 11 consecutive quarters of losses with mounting operational pressures, including high holding costs, bloated inventories, and sluggish demand, while analysts remain skeptical, with only 1 of 9 rating it a buy and a Wall Street consensus target below $1, with the average target near $1.55. Technically, the stock has broken through key levels, holding support near $1.80 and $0.92, surging past its 200-week moving average around $5 before retracing, and trading with explosive volume, as July 21st saw over 1.8 billion shares change hands versus a 634 million float, fueling a potential short squeeze despite overbought indicators. While call option demand could keep momentum alive, further gains will likely require catalysts such as a bullish August earnings report or a turnaround in housing dynamics. Investor sentiment is highly polarized, with retail enthusiasm bolstered by short interest near 20-25%, while institutional investors remain wary, warning that speculation, not fundamentals, is driving price action and cautioning about the risk of meme-driven reversals. For traders, the $2.50 to $3 range may appeal to those seeking short-term upside with tolerance for extreme volatility. The $3 to $4.50 band serves as a holding zone for early entrants willing to weather swings, and the $5 to $7 area is a logical profit-taking region given the lack of fundamental backing. Ultimately, Opendoor's rally reflects a classic meme stock surge, powered by retail hype and short squeezes, while the company's ongoing losses, weakening housing market, and bearish analyst sentiment underscore that this remains a high-risk, momentum-driven trade rather than a fundamentally justified investment. Remember, this video is for informational purposes only and is not financial advice. Always do your own research before making investment decisions. Next on the list, Navitas Semiconductor ticker symbol NVTS, with a market capitalization of approximately $1.63 billion. Navitas has become a focal point for investors due to its leadership in gallium nitride, GaN, and silicon carbide, SiC, power semiconductors, positioning it as a crucial provider of energy-efficient solutions for sectors like AI data centers, electric vehicles, fast charging, and clean energy, all backed by over 300 patents and a 20-year GaN-fast TME warranty. The company's transformation from commodity power chips to high-performance GaN and SiC integrated circuits has fueled growth, offering faster switching speeds, higher energy efficiency, and compact designs ideal for next-generation AI racks, EV chargers, and renewable power infrastructure. Key catalysts for its momentum include its 2025 partnership with NVIDIA to develop 800-volt high-voltage direct current power delivery systems for AI hardware, a deal that triggered a 164% single-day surge in its share price, along with product rollouts like a 12 kW GaN and SiC AI power supply platform boasting 97.8% efficiency, collaborations with BrightLoop for hydrogen charging and Volvo Zeekr for automotive applications, and its distinction as the first carbon-neutral certified semiconductor company, appealing to ESG-focused investors. Navitas Semiconductor has been on fire. Year-to-date, the stock is up 141.46%, and over the past year, it's delivered a 107.21% return rally from lows near $1.50 to around $8.60 per share. This kind of momentum is hard to ignore, especially with the growth trends powering it forward, dependent on execution, scalability, and a clear path to profitability. Technically, the stock shows strength, with potential buy opportunities on pullbacks to the $7 to $7.80 range, a holding zone between $8.60 to $9.50 as investors monitor product milestones and quarterly reports, and profit-taking levels near $10 to $12, where historical resistance and overbought conditions could converge unless supported by strong earnings or additional commercial wins. Investor sentiment remains bullish, driven by its NVIDIA ties, clean energy credentials, and product leadership, though the stock's rapid ascent has drawn speculative trading, raising the risk of sharp pullbacks if catalysts falter. Institutional investors maintain cautious optimism, praising Navitas's innovation while waiting for consistent revenue growth and operational scaling. Risks include its ongoing lack of profitability, potential execution delays in scaling GaN-CC manufacturing, competition from industry giants like Infineon and onsemi, and broader semiconductor sector volatility, though its specialized focus on AI, EV charging, and hydrogen markets offers resilience. For investors, Navitas presents a nimble, innovation-driven opportunity. Long-term holders might build positions near $7 to $8. Momentum traders can ride the $8.60 to $9.50 range, and disciplined investors may take profits at $14 to $16 unless earnings and growth trajectories justify further upside, making Navitas a differentiated play on the next wave of AI and clean tech growth. Moving ahead to the final stock. Rigetti Computing, ticker symbol RGTI, with a market capitalization of roughly $5 billion, the stock has emerged as one of the most closely watched quantum computing plays on the market following a meteoric 1,000% surge over the past year. The rally is fueled by both groundbreaking technological milestones and swelling investor enthusiasm around the commercialization potential of quantum computing. Rigetti recently unveiled its 36-qubit modular quantum system, boasting a 99.5% 2-qubit gate fidelity, halving error rates compared to prior benchmarks, which sent its stock soaring more than 30% in a single session. This advancement positions Rigetti as a leader in developing scalable quantum hardware, an area that continues to attract institutional and government interest as industries look to unlock exponential processing power for sectors ranging from pharmaceuticals to cybersecurity. Despite this progress, Rigetti's fundamentals remain a concern. The company reported just $1.5 million in revenue in its most recent quarter, falling short of analyst expectations, and posted a $21.6 million operating loss, underscoring that profitability is still a distant goal. However, with $238 million in cash reserves, bolstered by a $35 million strategic investment from Quanta Computer, the company maintains a financial buffer to sustain its R&D efforts and pursue commercialization over the next several years. On the technical front, Rigetti's stock has maintained a bullish structure, trading comfortably above its 50-day and 200-day moving averages as momentum traders drive volume to record levels. Short-term support can be found in the $14 to $16 range, a level where institutional buyers have stepped in during recent pullbacks, making it an appealing accumulation zone for risk-tolerant investors betting on quantum computing's future. For those already holding shares, the $16 to $20 range represents a logical hold zone, allowing participation in near-term upside as the company announces new partnerships or technological achievements. Meanwhile, the $21 to $22 range, which coincides with recent 52-week highs, stands as a profit-taking band, especially for short-term traders wary of Rigetti's stretched valuation relative to its minimal revenue base. Investor sentiment is sharply divided. Retail traders view Rigetti as a generational opportunity, often comparing it to NVIDIA's early days, while institutional investors remain cautious due to its heavy cash burn, uncertain commercialization timeline, and a lack of material revenue growth to justify its lofty valuation. Even with analyst estimates like Cantor Fitzgerald's $15 price target and projections that Rigetti could capture up to 15% of a projected $28 to $72 billion quantum market by 2035, tools like Alpha Spread flag the stock as significantly overvalued, estimating intrinsic value closer to $0.56 per share. For disciplined investors, Rigetti is a high volatility, high upside speculative play. Attractive for those seeking exposure to the transformative quantum computing sector, but requiring a strict entry and exit strategy to mitigate risk. Accumulating near $14 to $16, holding through $16 to $20, and trimming above $21 to $22 unless backed by clear revenue acceleration or strategic wins, offers a roadmap for balancing opportunity with caution. While Rigetti may not yet have the earnings foundation of a mature tech player, its technological advancements, growing ecosystem ties make it one of the more compelling speculative bets in the quantum race for investors willing to weather volatility. Share your thoughts in the comments. Which of these three stocks has the most potential upside? Which one are you keeping an eye on? If you found this helpful, don't forget to like, subscribe, and share with fellow investors. And remember to get your free breakout stock guide in the description. See you in the next one.